I think we are in a new bull market because we just had another essentially wipeout that happened February to April this year. I do think that the bigger story arc is that there is a big surge in U.S. prime age workforce. That's the millennials and Gen Z. Plus, they're inheriting a lot of wealth over the next 20 years, which is going to be transformed into more equity exposure, less credit. And the third is that the U.S. is at the center of a lot of the major structural changes taking place, AI and now blockchain. But those are going to really boost financial sector, which could re-rate to like 40% of the S&P, and then of course healthcare could benefit. So I think there's a lot to be excited about, and 2035 sounds about right. That would be a 10-year bull run from here.
Tom Lee, co-founder and head of research at Fundstrat, says the next bull run has already started, and it could last all the way to 2035. He believes the strength building under the market right now is setting up one of the longest and most powerful growth cycles we've ever seen. According to Lee, this run will be fueled by generational shifts, massive transfers of wealth, and new technologies like AI and blockchain. All of these forces are coming together to create a foundation for explosive growth in the years ahead. If he's right, the ups and downs we've seen in recent years weren't the end, but the setup for a decade of expansion. Lee says this could be one of the strongest bull markets in decades, and investors should be ready for what's coming next.
We put a lot of weight into understanding demographics and then the role history plays, like in each context. But I think it is one of the really misappreciated things that demographics really explains almost every bull market since 1890, actually. So if you followed every generation, the gaps between the generations are really where the bear markets exist, and the bull market tops coincide with the peak of a generation. So 99 was the peak of the boomers. 74 was the peak of, I think it was called the generation before the silent generation. Gen X peaked in 2018, and millennials will peak in 2035. So those are like rough waypoints for when actual major tops take place. I think the second thing that we found is investors, as they age, become wealthier, but then they become more skeptical. And so most of the wealth in America is held by older people, including institutional managers, right? They're over age 40. But the world in disruption is caused by young people.
Still paying taxes on your crypto gains? What if you didn't have to? With ITrust Capital, you can buy and sell crypto inside a tax-advantaged IRA, giving you a smarter way to grow your portfolio without worrying about capital gains tax. That's why they're the #1 crypto IRA platform in America, with billions in tax-advantaged transactions. There are multiple ways to fund your account. You can make a contribution, transfer an existing IRA, or roll over an old 401k or employer plan. You'll get access to a wide range of digital assets, low fees, and 24/7 trading, all backed by secure, one-to-one asset ownership with institutional-grade custody. And if you have questions, ITrust Capital offers 100% US-based customer support with real people ready to help. Click the link, use code DOSE7, and get your $100 funding bonus today. Start building your crypto wealth, tax-advantaged, with ITrust Capital.
So I think investors tend to think their own wisdom drives the economy, and it's actually, they need to put on the lens of a 20-year-old. That's what we do at Fundstrat. We survey constantly, so we think about what young people are doing, and they drive, ultimately, the markets and economy. And the third thing is, I think we don't lack recency bias. Like, we turned bullish at JP Morgan on February 2009, and we identified upcoming low that would look like 29 or 74. But what was interesting is that people were skeptical because that generation of investors just went through the dot-com bust and now the GFC, so they were now equity skeptical. So they couldn't imagine anyone would want to own equities for the next decade. But that bias is the reason why stocks can positively surprise. And so and even most recently, I think there's a bias now of people having a pessimism about inflation and pandemics, because we did suffer through 5 years of that, but that's causing people to now be skeptical of the world because that's in their bias. And so I think we're judgment free that way. People call us permabulls, but it's really more we're judgment free.
So in terms of where we are right now, I mean, you said 2035 there on the demographics. Are we very early in a new bull market? But we've obviously had a extended bull market already.
Yeah, I think that's what confuses folks, because I would say generally we've been up since 2020, but we've had two 20% declines since. So in fact, this has been a really disrupted recovery since the 2020 lows. And so I think we are in a new bull market because we just had another essentially wipeout that happened February to April this year. I do think that the bigger story arc is that there is a big surge in U.S. prime age workforce. That's the millennials and Gen Z. Plus, they're inheriting a lot of wealth over the next 20 years, which is going to be transformed into more equity exposure, less credit. And the third is that the U.S. is at the center of a lot of the major structural changes taking place, AI and now blockchain. But those are going to really boost financial sector, which could re-rate to like 40% of the S&P, and then of course healthcare could benefit. So I think there's a lot to be excited about, and 2035 sounds about right. That would be a 10-year bull run from here.
Sticking on the broad market for a moment, in terms of the risks that are out there, and we've had Jeremy Grantham on, we've had Ray Dalio on, so we've touched on some of these, but are you not concerned about, let's talk of the main one of the week, Fed interference, for example? Or if anything, does that spur equities potentially?
Yeah, Wilford, Fed independence is really important because the Fed is the single most powerful entity in the world, right? Because what the Fed says triggers an instant response across all markets and CEOs and policymakers everywhere, and even government. So that being independent is critical. I think that we're going to ultimately find that the administration does accede to what markets rationalization is, and I think the markets don't want to see a non-independent Fed. So I'm going to lean towards the idea that Fed Chair Powell serves his term. But even if it's just noise now, it is just someone comes across as more not happy with policy, but they're not going to interfere. I think there is a lot of negative implications for a budget deficit, and then of course the debt burden that comes with it. But there are a couple things I would just highlight as offsets. One is that the U.S. has a really big balance sheet that's basically valued at zero. If you compare the U.S., they own a lot of assets that other countries have already privatized, whether it's the postal system or in the U.S.'s case, even how they're valuing their gold holdings, national parks, land, resource rights. I think I've seen informal calculations. This does come into the tens of trillions of dollars. So the U.S. is a lot less indebted than it looks. And the second, of course, is if the dollar's dominance is set to grow in the next 20 years, then this is not a problem. So it really comes down to whether dollars are being more accepted.
Tom Lee says demographics drive major bull markets, with millennials set to peak in 2035. He sees this fueling a decade-long run supported by wealth transfers, a stronger workforce, and technologies like AI and blockchain. Despite recent pullbacks, Lee views them as part of a larger uptrend. He believes lingering skepticism from events like the pandemic could set the stage for positive market surprises ahead.
Do you think you'll be able to call the end of the bull market? Do you think your style is better suited to bullish momentum or not?
That's a great question. I can say that in '99, when I was a technology analyst and covering wireless, and that was living history of a bubble that really was a lifetime bubble. Mm-hmm. I think if people weren't in that period, it was 5 years where literally if someone said buy the stock, it could go up 20% in a week, and then it would still keep going up. Mm-hmm. I mean, that was really a different era than anything we've seen today. But in '99, it was clear to me that we were in a bubble. And I was only in my 20s. But I was at an investment bank, and they kept telling me, Tom, there's this $5 billion IPO, and we need to be the book runner on this deal. So you need to tell them we're going to recommend this stock. And I said, there's no way. I can't. I mean, this business model makes no sense. And And so I was not popular with the investment bank, but I passed on so many deals that wanted to do multi-billion-dollar IPOs that would have been hundreds of millions of dollars of fees for the bank, and I would have made tens of millions of dollars because at that time they were paying you for your IPOs. So I, with my own reputation at stake, I avoided the implosion. As you know, when that telecom internet bubble burst, many people's reputations got destroyed. Mine actually rose. I was still famous as a wireless analyst, but then I got promoted to be a strategist because I avoided all of that carnage. So if someone's asking me if would I know what a top looks like, by the way, I also had a very famous short, a sell rating on a stock during that era that almost destroyed my career because the company was so angry at my not recommending them that they even complained to the SEC. And my company at the time, it was written up in the journal, so someone can look it up.
I'm going to. Maybe we won't add it in the show notes, but I'm going to look it up.
I don't want to name the company, but they were so... Apparently the CFO said he'd wake up angry and yelling about me because I wasn't recommending a stock. So there's enormous pressure, and I still kept a sell rating. So I know what a top looks like. Now, I think one of the things that helps us at Fundstrat is we have Mark Newton, who is a technician who does really good cycle work, and he calls...
What's his handle on Twitter again? Because he's great to follow.
Yeah, at Mark Newton CMT.
Yeah, it's great.
Like
great
country
account.
music technician, I guess, because he does like country music. But he was dead on in 2021. He said that we were nearing a top. I kind of didn't understand how dire his warning was because we had the 2022 drawdown, and I said, Mark, listen, next time you got to just really turn off my screen when you're telling me this because I didn't appreciate the level of the warning he had.
Whenever the VIX has been above 60 and closes below 30, 100% of the time, that's been the bottom.
Yes.
That's what you said, right?
Yeah.
And that's true, 100% of the time?
Yeah, we never found an instance that it didn't work.
So my question is there a reverse of that? Do you have a statistic that would point to the top like that or something you look out for?
It's a great question. This is where I think our work kind of helps is that a lot of people say this measurement never seems to work at all. But what we do is we slice it into ribbons. And we say, well, at the extremes is one side or the other signal. So that VIX is a great example that at the extreme reading and then flipping back is actually really good signal. It doesn't work the other way, meaning if the VIX is suppressed and then it rises, it doesn't signal. I mean, short term it could signal de-risking, but it doesn't signal a major top.
What do you watch out for then? I mean, if the demographics and the current thesis is 2035, what would be a flashing warning sign?
Well, if we're looking for a major top, the top is going to have two sources of the negative catalyst. The first is a policy shock. So at the top, the Fed could pull the rug. That's not the right term. The Fed could end liquidity, and that would create a pullback. I mean, even a bear market. I mean, if we saw it in 2022, the Fed had to basically put a heart attack on the economy, and the stock market fell. So if the Fed decided that the economy was overheated, there is no bull market beyond that point. But we would both mutually see the warning signs because the Fed isn't operating in the dark and they're seeing the same data. The similar shock would come from a commodity, like if oil spiked to 300. Well, the level has to be, it's a burden on households. So I think it's now, well, maybe with inflation, it's probably $400 oil. You have to get really high oil. But the second source of a negative catalyst is excess speculation. And that was 99, because in 99, so much money was available. People were demanding that you get on board with a view. So
you don't sense that at the moment?
No, there's not, because there's so many skeptics. On our clients, when we have 400 hedge fund clients, meeting after meeting, and this is interesting. Someone inevitably always says, "Tom, everything you're saying is fine, but I don't believe you because you're always just bullish." And so they're immediately skeptical of everything we just said. We could lay out everything for 30 minutes and they'll say, but you're always just bullish, and they don't believe me. So there's skepticism at these levels That's not a top. Margin debt's something we can measure. It really needs to have a meaningful leap above the prior high to signal a top, and we're not there yet either.
Tom Lee argues that we're not at a true market top yet, since there's no major policy shock or extreme speculation like in past bubbles. With skepticism still high and margin debt low, he believes conditions remain bullish. Backed by demographics, wealth transfers, and innovation, Lee sees a powerful bull run that could last into 2035. He views today's doubts as fuel for even bigger gains ahead. Do you think market skepticism is actually a bullish signal? How long do you believe this bull run can last? Let us know in the comments. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.